What's up everybody, Hogtown here. Today I'll be talking about the S&P 500 and how to invest in it. Before I talk about the S&P 500, let's watch this quick clip of investor and billionaire Warren Buffett.
Since practically all of the time, and that is to consistently buy an S&P 500 low-cost index fund. Keep buying it through thick and thin, and especially through thin, because the temptation gets, when you see bad headlines in newspapers, maybe to say, well, maybe I should skip a year or something. Just keep buying it. American business is going to do fine over time.
Now that that's over, let's talk about what the S&P 500 actually is and how to invest in it. The Standard & Poor's 500, aka the S&P 500, is a stock market index which follows the performance of the top 500 largest publicly traded companies. Some other stock market indexes you may or may not have heard of include the Dow Jones Industrial, the Nasdaq Composite, the Russell 2000 Index, and many more. So you might be thinking, there's so many stock market indexes. Why did Warren Buffett recommend the S&P 500? Why is the S&P 500 the most popular? Let me tell you more about it. Being home to the top 500 largest publicly traded companies, like Apple, which is worth a staggering $2.97 trillion, you could say the S&P 500 performs pretty well. According to Bankrate.com, for example, an S&P 500 index fund will hold the stocks that make up the S&P 500 index in an effort to match its performance. Because these funds don't have teams of analysts and portfolio managers trying to beat the market, their costs are low, leaving more of the return for the fund's investors. The big question is, how do you invest in the S&P 500? To invest in the S&P 500, you will need to invest through an index fund or exchange-traded fund, also known as an ETF. The index fund I'll be talking about today is the Fidelity 500 Index Fund, also known as the FXAIX, which is a mutual fund. Why am I not talking about the Vanguard 500, also known as a VOO, which is also another great index fund? The Fidelity 500 Index Fund has a better 10-year annualized return with 11.85%, which beats the Vanguard 500 with 11.77%, according to PortfolioLabs.com. Both index funds have different pros and cons, and ultimately it comes down to preference. Let's talk more about the FXAIX. With a low expense ratio of 0.015%, the FXAIX is one of the cheapest ways to hold the 500 stocks in the S&P 500 index. With a year-to-date return of 20.52%, it honestly is an incredible and affordable index fund to invest in. You can invest in the FXAIX through trading platforms such as E-Trade, TradeStation, Webull, and other trading websites you know of, even Fidelity. If you are just getting into investing, the S&P 500 might be the best stock for you to invest in. Like Warren Buffett said,
The trick is not to pick the right company, it's to be, because most people aren't equipped to do that, and plenty of times I make mistakes on that. The trick is to essentially buy all the big companies through the S&P 500.
Thank you for watching. I hope everyone enjoyed watching this video. Comment down below what you think I should be talking about next. Don't forget to subscribe, like, and hit the notification bell for instant updates on videos like this. Thank you.